I'm Emily Shacklett, leader of Executive Services at Fairport and Luma Wealth. We come to you today, mid-year, with some income tax planning tips that you should consider before year end comes upon us. This year has flown by, and there's lots of things to consider before we hit December. So first of all, we suggest you review your tax projection. In reviewing your tax projection, pay special attention to interest and dividends and capital gains and losses. Things will look very different this year than they did last year. Fortunately, last year, we ended the year on a great note, but we did, in the interim, have quite a bit of volatility, and that gave us the opportunity to loss harvest. So for the most part, people's gains were quite low. This year, we're seeing a much higher trend on gains, and we also expect that your interest and dividends may likely be higher. Keep that in your mind as you do tax bracket management. And don't forget that you should probably prepare for higher income tax rates in the future. Point number 2, think about payments. So whether you have RMDs, wages, those are withholding opportunities. Take a look at your tax projection, make sure your payments are sufficient. You must pay in at least 90% of your current year balance due or 110% of your prior year balance due in order to avoid a penalty. If you've not yet done that, you still have time to adjust your withholdings, to do higher withholdings on your RMD, or to make estimated tax payments. Third point, if you are in a higher income bracket year, consider charitable gifting. These days, there's not a lot of itemized deductions that are available to you to reduce your taxes, but one itemized deduction that's stuck around, tried and true, is charitable contributions. And there's many ways to maximize those contributions beyond just giving cash. You can donate highly appreciated securities. You can set up a donor-advised fund and donate highly appreciated securities to that donor-advised fund. And that gives you a double whammy of a benefit because you avoid the capital gains on the shares that you donate rather than selling them, and you get a full fair market value deduction. So donor-advised funds are a great way in a high-income year to front-load lots of charitable contributions into the fund and get the deduction in that high-income year, but then sprinkle out your money to charities over time. Next point, fund your HSA. Believe it or not, you do not have to have earned income to fund an HSA. The only requirement is you have to be under age 65 and you can fully fund that HSA. And remember what they call HSAs, triple tax protected. Nothing better than that. The money goes in and gets a tax deduction, it grows tax-free, and it comes out tax-free as long as you use it for medical expenses. And while we're talking about HSAs, keep in mind that you can let that money stay in the HSA and grow. You do not have to use it or lose it in a given year like an FSA. So those HSAs, you have the opportunity to contribute the money, invest it, let it grow, let it accumulate, and then in your later retirement years, when healthcare issues generally become more of a concern and costly, you will have that fund set aside to help you. Finally, for anyone who's a self-employed or a consultant, there's some great ways to save taxes as a self-employed. First of all, you can set up a self-employed retirement plan, whether it be a SEP IRA or a solo 401k. These are great ways to get a tax deduction for setting aside money for yourself. I like to say you're taking money out of one pocket and you're putting it into your wallet, and you're still getting a tax deduction for it. So keep that in mind if you're self-employed or a consultant. And also, don't forget about your self-employed health insurance deduction. Many self-employeds are getting the coverage from the ACA plan, and that coverage tends to be very costly. Those premiums for both yourself and your family are deductible against your self-employment income. So that's our 5 tips for mid-year income tax planning. We welcome any questions that anyone has. Please reach out to either me or your Fairport or Luma Wealth advisor if you'd like to talk further, prepare an income tax projection, and figure out where you're going to end up next April.